monthly update on the Indian economy, August 2024. Welcome to India Business Insights. We are excited to bring you the monthly update for August 2024, focusing on the latest developments in India. Make sure to stay tuned as we dive into the highlights and key events that shaped this month. If you enjoy our content and want to keep up with our updates, don't forget to subscribe to our channel. Your support means a lot to us. Let's get started. CPI. On August 14, 2024, the much anticipated Consumer Price Index CPI data was released, and it brought some welcome news for consumers and policymakers alike. The annual inflation rate for July 2024 has dropped significantly to 3.54% from the 5.8% record in June. This marks the lowest inflation rate India has seen since August 2019, and it has fallen below the Reserve Bank of India's target range of 4% for the first time in nearly 5 years. One of the standout factors contributing to this decline was the sharp decrease in food prices. Food inflation, which had been a major driver of rising costs in previous months, rose by 5.45% in July, a substantial drop from the 9.36% surge seen in June. This easing of food prices has provided much needed relief to households across the country. Fuel and light costs also played a crucial role in this CPI update. In July, these costs fell by 5.48%, following a decline of 3.66% in June. The reduction in the energy prices has a ripple effect on overall inflation, making it a significant contributor to the overall decline in the CPI. Housing costs remained relatively stable during this period, with inflation in this category slightly changing from 2.69% in June to 2.68% in July. This stability indicates that housing expenses did not exert additional pressure on inflation, allowing for a more favorable overall economic environment. On a month-on-month basis, consumer prices saw an increase of 1.4% from June to July 2024. This uptick reflects the seasonal adjustments and ongoing dynamics within the economy, but the overall trend is encouraging. The significant drop in inflation to 3.54% is a positive development, primarily driven by base effects from food prices and a reduction in fuel costs. However, analysts caution that while this decline is promising, it may not be sustained throughout the year. The RBI remains vigilant as it continues to monitor inflation closely, especially with various economic factors at play. Some of the analysts think that this low inflation could be a sign of continued weakness in demand. Please tell us in the comment section your thoughts about this. Foreign exchange reserves. As of August 21, 2024, India's foreign exchange reserves have reached approximately $684.5 billion, reflecting a continued upward trend from previous weeks. This marks an increase of about $1.86 billion from the reserves reported on August 16, which stood at $682.62 billion. The foreign exchange reserves consists of several critical components. Foreign currency assets (FCA), approximately $600 billion. This is the largest segment of the reserves and include various currencies held by the Reserve Bank of India (RBI). Gold reserves. Valued at around $57.43 billion, gold acts as a significant asset for hedging against inflation and currency devaluation. Special drawing rights (SDRs). Approximately $18.4 billion SDRs are international reserve assets created by International Monetary Fund (IMF) to supplement member countries' official reserves. Reserve position in IMF. About $4.58 billion. This reflects India's quota in the IMF, which allows access to additional resources if necessary. Export-import. India's trade data for July 2024 was released on August 15, 2024, showcasing a mixed performance in exports and imports, reflecting the ongoing dynamics of the global economy. Exports. Total exports for July 2024 was estimated at approximately $67.8 billion, representing a growth of 4.5% compared to $64.85 billion in July 2023. Merchandise exports accounted for $36.5 billion, up from $35 billion a year earlier. Key sectors contributing to this growth included engineering goods, pharmaceuticals, and textiles, with notable increases in electronics and agricultural products. Non-petroleum exports also showed a significant movement, increasing by 6.2% to $28.5 billion. This may be on account of stronger efforts by Indian companies, PLI schemes, and other initiatives, and has happened despite tepid demands in several markets and multiple geopolitical tensions. Imports. On the import side, total imports in July 2024 were around $75 billion, a rise of 5% from $71.43 billion in July 2023. Merchandise imports reached $58 billion, up from $54.50 billion, primarily due to higher imports of crude oil, gold, and machinery. The surge in crude oil prices on the global market has significantly impacted India's import bills, reflecting ongoing geopolitical tensions and supply chain disruptions. Trade balance. The trade deficit for July 2024 stood at approximately $7.2 billion, slightly narrowing from $7.58 billion in the previous month. This improvement in the trade balance is attributed to the growth in exports outpacing the rise in imports, although the overall deficit remains a concern for economic policymakers. The government continues to implement various initiatives aimed at boosting exports, including the Production Linked Initiative, PLI scheme, and efforts to diversify trade partnerships. Additionally, India is exploring new markets for its goods, particularly in Africa and Southeast Asia, to reduce dependency on traditional trading partners. Despite the growth in exports, challenges such as fluctuating commodity prices, inflationary pressures, and global economic uncertainties persist. Analysts suggest that while short-term growth is encouraging, sustained performance will depend on addressing these challenges and enhancing competitiveness in the global market. Overall, the trade date for July 2024 reflects India's ongoing efforts to strengthen its export capabilities while managing import costs in the complex global economic landscape. GDP. In August 2024, India's economic landscape continued to show promising signs, bolstered by updated GDP projections from various institutions. A significant highlight was the International Monetary Fund (IMF) revisiting its growth forecast for India for the fiscal year 2024-25. On August 22, 2024, the IMF increased its GDP growth estimate to 7%, up from the previous estimate of 6.8%. This upward revision was largely driven by a resurgence in private consumption, particularly in rural areas, reflecting a robust recovery in domestic demand. The IMF's report emphasized that the Indian economy has demonstrated resilience despite facing global uncertainties, including geopolitical tensions and fluctuations in commodity prices. The recovery in rural consumption is particularly noteworthy as it indicates improved purchasing power and economic activity in the agricultural sector, which is vital for a significant portion of the Indian population. In conjunction with the IMF's optimistic outlook, the Reserve Bank of India (RBI) also provided its projections during its monetary policy meeting in August. The RBI forecasted a GDP growth of 7.2% for FY25, citing strong domestic demand as a key driver of this growth. The central bank highlighted that various sectors, including manufacturing and services, are expected to contribute significantly to this growth trajectory. Moreover, the RBI projected that inflation would remain manageable at around 4.5% for the same period. The stable inflation outlook is crucial as it allows the central bank to maintain a supportive monetary policy environment, fostering conditions conducive to economic growth without the need for aggressive interest rate hikes. The overall sentiment from these updates indicates a cautiously optimistic view of India's economic trajectory. While the country is poised for continued growth, challenges remain, particularly in the global economic landscape. Factors such as geopolitical tensions, supply chain disruptions, and the potential impact of global inflation could pose risks to this growth outlook. We have also noticed that improvement in rural demand outlook, and after the elections and major heat waves, the monsoon also saw a somewhat weak start. However, it recovered in July and we have seen significantly more active monsoon in August. On the bank of this, as per the Ministry of Agriculture data, the area under sowing in paddy, sugarcane, pulses, and oilseeds has increased by more than 2%. This should keep the fear of food price inflation under control. A strong monsoon and stronger agriculture output should also provide a significant boost to rural consumption. IIP, the Index of Industrial Production (IIP) for August 2024 showed a year-on-year growth of 3.2%, down from 5.9% in July 2024. The slowdown was driven by a contraction in the manufacturing sector, which has the highest weightage in the IIP basket at 77.6%. Key highlights: manufacturing sector contracts. The manufacturing sector contracted by 1.1% in August 2024 compared to the same period last year. Mining and electricity sectors grow. The mining sector grew by 4.5%, while the electricity sector expanded by 8.2% in August 2024. Use-based classification. Primary goods grew by 5.2%, capital goods contracted by 0.7%, intermediate goods grew by 2.5%, infrastructure construction goods grew by 4.3%, consumer durables grew by 2.1%, and consumer non-durables contracted by 0.9%. The slowdown in IIP growth is expected to reflect in the contraction of the gross domestic product (GDP) growth numbers for the July-September quarter. However, the manufacturing sector is expected to maintain its momentum on the back of sustained profitability and pickup in rural demand. Projections for the Index of Industrial Production (IIP) growth rate in September 2024 indicate a continued slowdown in industrial activity. Analysts expect the IIP growth to be around 5.3% for the fiscal year 2024-25, which is a slight upward revision from earlier estimates, but still lower than the 5.9% growth recorded in the previous fiscal year. Infrastructure. The Indian government announced an 11.1% increase in the capital investment outlay for infrastructure, raising it to Rs 11.11 lakh crore. This allocation represents 3.4% of GDP and is part of the ongoing efforts to enhance infrastructure and support economic growth as India aims for a $5 trillion economy by 2025. Major projects and developments. National Infrastructure Pipeline (NIP). The NIP continues to play a crucial role. The projects worth Rs 108 trillion at various stages of implementation. This pipeline is vital for sustaining long-term economic growth and improving infrastructure quality across the country. Delhi-Mumbai Expressway. One of the largest infrastructure projects, the Delhi-Mumbai Expressway, is on track for completion by 2025. This expressway is expected to significantly reduce travel time between the two major cities and enhance logistical efficiency. Airport projects. The Minister of Civil Aviation announced plans to inaugurate 15 airport projects valued at $12.1 billion by 2028, aiming at improving air connectivity and boosting regional economies. Investment trends. Foreign direct investment (FDI). Between April 2000 and December 2023, FDI in construction development and infrastructure activities reached $26.54 billion and $33.52 billion respectively. This influx of foreign capital is crucial for financing large-scale infrastructure projects. Private sector participation. Companies like Adani Ports and Special Economic Zone Limited, IRB Infrastructure Developers Limited, and Larsen and Toubro Limited are leading the charge in infrastructure development, showcasing impressive growth rates and expanding their project portfolios. That's all for today. Thank you for joining us for the August 2024 update on the Indian economy. We hope you found this information insightful and informative. If you enjoyed this video, please take a moment to like it and subscribe to our channel for more updates and expert analysis. We would also greatly appreciate your feedback.